Hey there, folks. This is Mitch Firestone. It is 9:35 on March 13th, 2019. I'm coming to you from Wall Street in New York City, and just kind of giving you a quick market overview as the open occurred about 5 minutes or so ago. And we're right here. We're looking at the SPY, the ETF for the S&P 500, and so you can see right here. We're sitting at around 280 and a half. But the interesting thing is, this is a chart that I've obviously had on here for a number of months now, and it's kind of unusual in that, normally with our supply and demand thesis, more often than not, once a level is hit, which this would have been an initial level here, more often than not, once it's hit a second time, once it then is revisited the first time, maybe it might work again a second time, but then after that, really, it tends to get chewed up. And yet, in this particular case, it came back once, and it kind of went all the way through. It almost was violated here the first time. Managed to hold together. It came back a second time, left very energetically, in fact, more energetically the next time, and then came back again at the end of February, and it technically it pierced it, it violated it, but managed to hold together. So now here we are right here, and if you look right next to this blue line here, let me just blow this up here just a bit here, um, and you can see right here. This was yesterday, and here we are today. So we've just opened, and you can see we're right in the middle of this level, and the question is, what's this level going to do now? And in theory, I would expect that at some point this level really has no business holding together here. But on the same token, the market will do what the market will do. But from all indications here, we made this triple top, which was really unusual enough as it was. Then the next time this came back, this was obviously violated and chewed to death here, and in fact again was actually violated here as the thing as price actually opened here about a week or so ago, week and a half, and now here we are now. So in terms of distance, I basically what I did was I plotted the next quality supply zone up here. Okay, and in terms of distance, we are about, just look at that number here in blue. Okay, you can't see it because there's an overlap here, but it says 2.28%. So that's where we are now. We're about basically 2.3% away from where we are now to the base of this next quality supply zone here. So, which is essentially a 6-point move. So obviously, based on a price of 280, you can see that would obviously be around. It'll be obviously a little less than 3%. So anyway, that's where we are now. And in theory, what I would expect to see happen is once if price in fact goes through here and basically, pretty much finally puts a nail in the coffin of this level here. If you notice, we have this just major smackdown here that happened in mid-October. Well, this essentially represents, pretty much just a plunge, like a safe falling out a window. There are really no levels in here, with the exception of if you, go down to, let's say, a 30-minute chart or a 60-minute chart or a 15-minute chart. Undoubtedly, there probably are a couple of levels here, but those are more likely going to be pauses than anything else. But in terms of kind of a bigger picture scenario, I would expect over the next few days, at some point, let's say where we are now, we're Wednesday here. I would not be all that shocked to find that not necessarily this week, but probably early next week, we're going to look up and we're going to find that essentially price more or less kind of went through this area, and then this will be the next kind of battleground for the market. So, we'll obviously have to see what happens. Obviously the levels are only one part of where we expect the market to go, because the thing that's on the other end, of course, are in this day and age geopolitical events, and we have Brexit, coming up. Yesterday Theresa May lost another round in Parliament, so in a sense, all of that is kind of unraveling a bit. Obviously, we have our own mess in Washington and the drama of day to day, and so in a sense, we don't necessarily know what's going to happen. Um, just to be clear, though, all of those things are actually are catalysts for price moving. But the real reason that price moves, of course, is the areas of supply and demand. The question is what's going to influence the supply and demand equation. And if all of a sudden something untoward or something pessimistic comes out of Washington or comes out of some major economist or something like that, you could just see price plunge out of here again. But in a sense, if you don't hear anything, if there's nothing exogenous, if there are no real outside catalysts that are just going to kind of put the thumb on the scale, or in a sense put an entire hand on the scale, and just essentially change the supply and demand equation. If the supply and demand equation is in a sense allowed to simply play out naturally, almost certainly you're going to there's essentially about 2.8% air that's sitting above this level, which again has been beaten up and chewed to death, and that's kind of the next stop up. So to some degree, if things are calm, I would look for the SPY to kind of rise from roughly about 281 to 287 until it hits its next what I would call a battleground. And so as a result, if we're going to sort of adopt a cautious upward bias, well, then more or less what I'm going to be doing over the next couple of days in terms of a battle plan is to adopt a perspective that I'm going to be looking for pullbacks on smaller time frames into quality demand zones in order to essentially leg into what I consider to be the bigger picture trend, which is again to effectively rise, let's say 2 to 3%, assuming that nothing, there's no major news announcements, which of course in this day and age might be considered to be almost a naive thing to say because you can't go 2 hours without having something CNN squawking about something. So at any rate, but that's where we are now. So again, to summarize, we're looking at pretty much air. We basically have a supply zone that has been chewed to death here. There are essentially no quality levels in any sort of higher or even midterm time frames here. And then the next stop up is about 287. And so as a result, we'll be looking for kind of short-term pullbacks in those smaller time zones in order to effectively leg into the bigger picture trend, which is a kind of what I regard as sort of a cautious current upwards of about 2.5 to 3% until we get to 287. So anyway, that's what I got here, and I will catch you soon.